All right, maybe the highlight of the damn week. Icebergs come in here. I'm not going to get into detail with these, but a big one came in, dropped it down, and here was resistance. Market sells off, creating a magnet to come back up eventually. Now, we know this red iceberg is there, this entire sequence in here. Couldn't pop through it there, rolls off, shakes out longs to something that's really interesting. And Dave brought it up, the fact that not only would you get a shakeout below 06 in this case, why? What's an obvious place to put a sell stop? Before you know any of this or this, if you're long around in here, where would be an obvious place to put a sell stop? And I think if you asked a bunch of fifth graders, they'd all say, below these swing lows right in here, correct? So that came in to be about below 6 even. And David said you'd shake out some longs, sweep them down, and then come back up through it. And you have less longs in the market. When you have less longs, you have less sellers above. Now all you got to worry about are trapping shorts. Now, a couple dynamics. You had this red iceberg, who at the time did 2,500 and was showing like 25 contracts. Iceberg is a big order that has more underneath it. There was a big order of about 300 that was showing all 300 at 975, a tick below it. That's going to be important for in a second. So you get less longs with the sweep through this yellow line. Less longs equal less sellers. It's nice to have less sellers if you're looking for price to go up. And we also had on our puke tool, you see it on here. You normally would see it here too, but it goes way after 6 minutes and then it shows up and stays here for 8 hours. But you see this bump out of green, that's showing you longs puke. And that's what you would expect when it goes under 6 even, and then confirmation from sell stops that are coming out, because that's what this puke tool is following, both buy and sell stops. So without getting too confusing, but just this is very simplistic stuff. When you have less longs, you have less sellers. That yellow line would show where a lot of longs would puke or exit, and they do, and they come up back through it. Now they had the magnet. Now what's interesting when it gets up there is that 300 lot offer at 975 went up 3 ticks. As soon as he went up, we were trading 9 quarter, 9 half. It didn't pop right away, but it stayed 9 quarter, 9 half, 9 quarter, 9 half, 9 half, 975, and then back and forth. What we said back in here, and we said it in here, at some point when they go through 10 even, they're gone. Don't be stuck short. And so, sure enough, when we went, we went. And it's because you have shorts under pressure, and when you squeeze a lot of shorts and get them to lean on, think of the word lean. It's most important, one of the most important words in trying to read order flow. When shorts are leaning at a particular price, when it goes, they go. And shorts who are buyers turn into those buyers quickly, and they try to chase it up. It actually went 2 or 3 more points than I thought initially. I thought it would hang out at 14. It ends up hanging out at 16 for a while, and it's still into that range. But either way, you see it pop, and it's not random anymore. It's predictable. It's an advantage. It's an edge that you have by understanding where the orders are, how order types are used. If you're not looking at trying to understand how order types create intent, then go become a plumber, because that's what you have to nail down in trying to trade. Now, if you look in here, this is kind of a magnifying glass of up here. So inside those 2 yellow circles is the same sequence. He didn't have to do much more than 2,500. He only did 2,586, and he's done. But when that 300 lot moved, and here he is, right here, you see it, he ends up getting filled at like 1050. He was offering 975s. Once he moved, that was the win moment for this pop to probably happen. Location plus timing is going to equal a successful strategy. I don't care what the strategy is. Location and then the timing of that location is going to equal success. Doesn't have to work that quick, but the definition of a good location is minimal heat and having it go your way ASAP. The faster a trade goes your way, the better location it was. It's always about playing with the house's money and put yourself in a position that you minimize, try to eliminate the heat you take. And that's the only way you can build your size. Can't build your size if you have to take a lot of heat to eventually find your winners all the time. But this is a setup and a half, understanding the LEAN, lean. It's not a different phenomenon. It's been around since the beginning and invention of price. Have a safe weekend. Keep yourself healthy. Subscribe, comment,